From 11FS, this is Fintech Insider News, and I'm your host, Benjamin Ensor, Director of Research and Strategy. Thank you so much for downloading this podcast. If you like what you hear, please recommend us to a friend. This week, we're talking about the European Parliament authorising new regulations for instant money transfers. And we talked about how important this is, although it seems like only a small change. Actually, having instant payments right across the whole continent simplifies and standardizes things for businesses, but also gives customers more certainty about where their money is, means that money doesn't sit lounging around in banking accounts waiting to be processed, with huge benefits for both consumers and businesses. So fantastic, the European Parliament is encouraging all European countries to embrace the same standards. Then we talked about some new research that more than £1 trillion of deposits are languishing in low interest rate savings accounts in the UK, according to new research from Lightyear. And we discussed how actually this is a problem right across most major economies where they've seen interest rates rise, and customers end up leaving their money in bank accounts. And we talked about whether that actually raises some slight ethical issues of, banks not treating their customers fairly, and discuss what are some of the solutions, and could things like open banking data help customers see, oh dear, I've forgotten about my savings accounts, and I'm certainly going to go and check mine after this. And we talked about Revolut combating roaming charges with the launch of eSims. Revolut is trying to help customers who travel from the UK to other European countries who now face roaming charges thanks to Brexit. Revolut is trying to help them by giving them an eSIM that's integrated into Revolut. And we talked about what a fantastic job Revolut does innovating repeatedly. So we get into all this and much more on today's show. Hello and welcome to episode 827 of Fintech Insider. I'm Benjamin Ensor, Director of Research and Strategy here at 11FS. I'm joined this week on Fintech Insider News by three guests who are here to help break down this week's biggest news stories in fintech and financial services. So firstly, I'm delighted to welcome my colleague Nadine Timmer-Bodenstein, Ventures Product Lead at 11FS. I got that wrong. It's for Bodenstein, isn't it? Thank you. How are you doing, Nadine? It's brilliant to have you here.
Yeah, I'm delighted to be here. Thank you so much for having me. First episode, as you said, and a little bit more about myself. So I'm a product lead in Ventures. What does that mean? I work with clients across the whole product lifecycle from ideation to delivery to help them define new customer propositions that are really desired and valued by their customers. I've been with 11FS for 2 years now, so hopefully this is not the only podcast I will be on.
I'm also delighted to welcome Martin Sokk, Chief Executive and Co-founder at Lightyear. It's great to have you back with us, Martin. Please, can you remind our listeners a little bit about you and about Lightyear?
Good to be back. My life is rather simple in that sense. Like, I'm still trying to figure out how to get everybody in European continent to invest, and like maybe catch up with the Americans, where like half of the people are investing, and in Europe it's like 15% or so. But we're getting there. And I think like last years and everything has been like quite a bit of exciting stuff around like all the interests and like assets and everything around that. Before I had that mission, I was in a little bit similar mission. I was working in TransferWise or Wise, not these days. I was working on a product and operations and people, and effectively trying to figure out like how to remove the borders in the world and make sure that everybody has a fair treatment when they're sending money across borders. And these days also they have all the cars and like more of the complicated banking stuff. But I think like people are not treated well in the world, and like through my life I've been trying to fix that in one way or another.
Fantastic. Well, it's great to have you back. And finally, it's also great to welcome back Fliss Berridge, Director and Co-founder at Ordo. Thank you so much for joining us. Could you also remind our listeners a little bit about who you are and what you do at Ordo, please?
Sure. Hi there. Yes, thanks for having me back. I am a professional musician turned lawyer, naturally. And after working in private practice for some years, I moved in-house to be the lawyer for all the payment schemes in the UK. So that includes backs and checks and also faster payments. And then after a few years of doing that, I moved to be general counsel for faster payments. And whilst I was there, we opened up the faster payments payment system to neobanks and challenger banks, and indeed non-banks like Wise, as Martin has come from. And we also contributed to the Payment Strategy Forum's work on request to pay. And then myself and the Faster Payments management team went off to set up Ordo, which is an open banking payments platform. And now we provide open banking payment solutions, including request to pay and payouts and refunds. And the newest kid on the block, variable recurring payments, VRP, that everyone in open banking loves talking about.
Well, fantastic. That's quite a career from musician to lawyer to startup founder. Fantastic. Well, with that, let's jump into the news. And I'm going to start with a big announcement for all of you Fintech Insider fans, particularly those of you who are within reach of London, because After Dark is coming back to London next month. Please join us at Village Underground on Thursday, the 21st of March, to watch David Breer and some very special guests record an episode of Fintech Insider News live. You can find all the details and secure your spot right now at 11fs.com/afterdark. Alternatively, if you can't get into London on that date, or you're listening to this in the future, you can also sign up to our mailing list to be one of the first to hear about our other events. So do visit 11fs.com community for more information, or 11fs.com/afterdark to sign up. Okay, well, let's start with our first story this week, which is that the European Parliament has authorised new regulations for instant money transfers. The new regulations will ensure that euro money transfers arrive in bank accounts within 10 seconds across the European Union. The guidelines are a revision of the existing Single European Payment Area, or SEPA, protocols. It means that banks and other payment service providers, or PSPs, will now be responsible for the immediate processing of credit transfers, regardless of the time of day. Additionally, payers must be informed within the same time frame whether or not the money has been successfully transferred to the recipient. And these new regulations will apply to all European member states. Fliss, it makes sense to start with you first on this. Is this great news for consumers, great news for fraudsters, or great news for both?
Well, yes, I definitely think it's great news for consumers and also businesses operating. We've had instant payments in the UK in faster payments since 2008, and it's clear that people have got a real appetite for having that agility and dynamism with their payments that they have with just about every other aspect of their life. We all walk around now with our smartphones glued to our hands, catching up on emails, sending LinkedIn messages, doing research on the hoof whilst walking from one place to the next. Why can't our payments and bills and invoices be dealt with in those sorts of in-between moments as well? And it's a great boost for liquidity, for consumers, for businesses. It brings all sorts of benefits of businesses being able to replenish their supply the moment one customer is supplied, one customer is paid. It's good for consumers where they can manage their finances. They can look in their bank account and know that the money they see there in their bank account is absolutely the amount of money they have left for that week or that month. Instant payments are a real enabler for people living a fuller life. As Martin was saying, it's helping people make the best of their lives and live better lives. Instant payments is a real gateway to that.
Thank you. And Nadine, what do you think? How transformative are these new regulations? What did you think of this?
I think it's interesting. I guess to build on Fliss's point, the key thing for me is that instant gratification is expected these days. Quick, easy, convenient, etc. I think what I will be interested to see is how this potentially translates into customer-facing propositions. Personalization, hyper-personalization are buzzwords at the moment, but how does this immediacy, this reflection of available balance, what is actually in a consumer's account, how does that help us to deliver more personalized insights, help with planning, help with providing those types of tools that we know from our own research is super important. One of the jobs to be done that comes up time and time again with customers is just help me understand how I'm doing, help me to make smarter decisions. And to be able to do that, we need the most accurate data. So I think that's really interesting. in terms of how transformative it is, I think, yeah, it has the potential to do that if we build on it and deliver those types of personalized propositions in the future.
Martin, what did you think? We've talked a bit about some of the benefits to consumers. Do you see benefits for businesses? I mean, does this matter to Lightyear? But what do you see as the benefits for businesses here?
Let's think about like for a moment like what's actually happening. So like it's weird. Like we are headquartered in the UK, and like UK, it's like normal. Like this is the way payments work. And then you go to the Europe, and then you have, I would say like Eastern Nordic side of the Europe, but like that's also normal already. So like set by instant kind of works. And if you go to the kind of Southern Europe, that doesn't work. So like this implementation has been like so bad, and like it kind of feels that this kind of is a forcing function for the Southern Europe. Like finally, let's make this happen. So like if you think about like what's the actual impact like on a day-to-day basis, is that I think there's like a couple of things what business and consumers can feel right away. Like one thing is like the friction of using anything. So think about it, if you're opening a new broker or bank account in the UK and you send the money on that account and the money is instantly there so you can do stuff. But like if you're in like France, then like it takes a day to get there. And now you close your app, you go away, and then maybe you're not never going to come back. So there's like massive friction of like people actually using this. So for businesses, it simplifies quite a bit of onboarding, acquisition, and so people can actually use stuff. But there is a interesting kind of statistics around like faster payments, and it's when if people can withdraw money from your business account faster, they keep more money on that account. So the reason for there is that there's a trust element there, because if you can't get your money instantly back when you need it, then you are like not trusting enough money into that account, because maybe you need that for whatever reason, or maybe something happens, you need to pull it back. But like if you know that you can get it back instantly, anytime, whenever, means that like you're willing to keep more money there. So for us, for example, is that we have a lot of customers who use our account to effectively, like in this current interest environment, to earn interest. And like, but they can now keep quite a lot of money there if they can get it money back. But if they can't do that, they don't risk that because maybe they need that money tomorrow. So there's quite a lot of kind of customer behavior. So effectively, I think it comes down to trust and like the friction of the system, and like that simplifies it quite a bit. So is it transformative? Yes, if it's done well, I think.
And also, you mentioned there, Martin, that at the moment it's one day. Maybe you'll be able to get your money the next working day. Actually, if you think about weekends and bank holidays, if for Easter weekend, for example, if you make a transfer at 9 a.m. on Good Friday, you don't get that money until Tuesday. That's 4 days later of real life, of real time. Whereas SEPA instant credit transfer means within 10 seconds, 24/7, 365 days a year. That is brilliant.
Yeah. And also like it kind of defines a little bit more like where you can keep the money. Like I literally have had like, I'm like in Thailand somewhere and I need to kind of move money between the accounts, and I can do it instantly and like move it and pay right away, and I don't need to worry about it. But like if I don't have, then you have this planning schedule always in your mind.
Nadine, I was joking earlier when I was asking Fliss whether it was good news for fraudsters, but on a slightly more serious point, what's the challenge here for sort of maybe some of the banks or the payment services providers? Because suddenly that time window that, yes, to some extent they were making interest on the money while they was, the banks or whoever was sitting on it, they've also got to do that sort of instant fraud detection or fraud evaluation. How hard is that? How big a challenge is that going to be for the banks?
Yeah, absolutely. I think it is a concern. When I first read this headline, I thought, oh gosh, okay, well actually, 10 seconds, that's also much quicker for someone to perhaps target a vulnerable customer, target someone who's in distress, if they've managed to either gain access to the account or something like that. It does pose a real challenge. So I think it's concerning. And I mean, we know that there's also kind of the the intention that there have to be a set of ID verification and fraud detection solutions to avoid this happening. So I think it is a real important element of this for that successful kind of implementation and delivery. To be able to get these kind of customer-facing, business-facing benefits that we've discussed, we have to make sure that this is also a safe and secure solution that people do continue to trust and feel comfortable with using.
Fliss, I'm very reluctant to think that there are sort of lots of lessons for other European countries from the UK or potentially from the Nordic markets and so on. But in this specific instance, are there some lessons, do you think, that banks and payment service providers elsewhere in Europe can learn from faster payments in the UK and from, as Martin was saying, the existence of instant SEPA payments in some other Northern European countries already?
Yes, sure. I mean, in the UK at the moment, we have live COP, the COP service, confirmation of payee. And I think that seems to be fitting to fulfill the EU rules that say the banks must put in place these fraud and ID checks and not charge any extra fees for it. That would give, this is kind of a fuzzy match of the sender puts in the name of the person they think they're sending money to, and it comes back with, yes, this is the name we have on the receiver account. And I was pleased to see that the rules say that this is to be provided at no extra fees or charges, because the banking system should be secure. The bank should be able to make secure and reasonably robust transfers, and that be the baseline service they offer. So I think that's absolutely correct. And just to plug open banking, this is where open banking puts another layer on top of that as well and adds to the security. When someone makes an open banking payment, which uses the faster payments rails in the UK, and then we'll use the SEPA Inst rails in the EU, the playback that the sender gets for where they've been requested money is the actual account title of the person requesting money to them. So there's much less scope for stifling or changing and inserting a new payment name for where that money's got to go to. And in fact, in open banking, that's an indelible bank account title and it can't be changed. So security is to be a top priority for all participants in this ecosystem. And there are tools out there at the moment, and data sharing will come in as part of that. But there are solutions there that make these transfers safer already, and they can be utilised across countries.
We're all about plugging fintech innovations like open banking on this podcast. So plug away.
Great.
About innovations that make things better for customers. Martin, let's bring you in for the sort of last closing comment on this. You made a good point about how this has sort of existed in many European markets already. Should the European Parliament have sort of had to intervene and had to bring in top-down laws to make this happen? Or is that just a requirement for the single market to work, that you just have to say, you have to hit a point where you just say, there's just got to be continent-wide rules, otherwise the single market isn't functioning?
Yeah, I think I'm pro-Europe in that sense. Individual countries will struggle to go against the bigger world in that sense. So a lot of cool things have been happening. Like the single market happened means that you can have passporting between the markets. You can have a license in one country and then you can use this license in other markets and so on. And more and more this kind of the common market comes in, and this is pretty cool. Again, compared to the US, is its kind of fragmentation is pretty strong in so many different aspects. And but if you have the ability to at least kind of regulatory create the kind of a layer where everybody can compete in the same levels. So investment firms, for example, Germany has one story and everybody else has another story, and then you have UK where you have another license again. So just the kind of the heavy lifting what comes on here is quite big. So if somebody kind of makes the equal playing ground, then it kind of helps the market quite a bit. So this is the way we can actually build something. Otherwise, we're going to be siloed in our small markets.
So it actually makes it much easier for European companies to sort of get scale and be competitive, because you've got common infrastructure and common frameworks.
And also common rules in a way that if something is true in one market, that means that everybody has the same kind of requirement or ability to do something. So if you don't have that, then maybe somebody has one way to make money, somebody has other way what you need to kind of jump through the hoops because you can't service some customers because of local rules or so on. Open banking, I think, is extremely good example where, like, again, in the UK, it feels like it's a solved problem in many ways. It works and customers love it. We actually, when we launched our product and customers came in and it's like, what is this? Why you don't have an open banking? It's like the first thing what they said. But like this first iteration, what we did, we added open banking to our product. And then you go to the Europe and it's like, oh, cool, Europe, let's put the open banking there. And like, sorry, maybe there are, but like I haven't seen a single provider who can offer everybody everything in Europe. So you need to go again country by country and implement all these various providers, and like this is a headache. So I like really hope that Fliss will come in and like fix everything so we can have one provider and it's one market again.
With pleasure.
Okay, from payments to deposits. Our next story comes from the UK, but I think it could probably come from a lot of different countries. So this was reported in City AM, a newspaper here, which is that more than £1 trillion of deposits, 1 trillion, are languishing in low-interest savings accounts. So although the UK's central bank base rate has flattened out at 5.25%, the average rate on easy access savings deposits was just 2.02%. This is according to analysis by investment platform Lightyear and based on December 2023 data from the Bank of England. Lightyear believes roughly 1.15 trillion of deposits are earning below average interest. However, the average interest on fixed-term deposits was higher at 3.71%. The figures come at a time when British banks are under fire for not passing on rising interest rates to their depositors, but still hiking their mortgage prices. Martin, it's great to have you here with us to talk more about this. So why did you do this research and what can we all learn from it?
So let's wind back a year, or maybe even 3 years. When we started this business, we were in an environment what had negative interest. Means that if you had the money in a bank account, and like if you had a small amount of money, banks didn't charge you. But if you had a lot of money, you needed to pay for a bank to actually keep the money in the bank. And but banks were still profitable. They made like quite the sizable profits in these times. Now tables have turned into the level where they're paying getting more than 5% on all the cash what's on their platform. We're talking about trillions of dollars or trillions of pounds or euros or whatnot. And like the amount of kind of profit revenue what comes into the banks is like unheard of at the moment. So we kind of realized that when we were building this business, we realized that cash is a new asset. So before it was you buying stocks and ETFs and maybe money market funds or like something like that. Now it's like people keep cash and this could be an asset because we realized that we are getting paid with all the cash what's on our platform. So we decided that we're going to turn it around and like we give that back to the customer. We're still wealth building a platform. So let's give the interest rate back to the customer. So we made really simple model. We didn't know that is it going to go up and down or sideways. We just charge 0.75% and everything else, whatever happens, customers will get back. And I think like that was kind of quite a bit transformative move because like nobody really realized that like how much customers need that interest. Like you rightly said, like mortgage goes up, inflation is going up, food prices go up. Like it seems that every corner where you go, you lose money. But at the same time, when you just keep your cash in a bank, then bank makes a lot of money out of that. So now I think like year later after this kind of significant change, like every single regulator in the European market has figured it out and like they're going to the banks and it's like, hey guys, like this is not okay at the moment. So you need to start raising kind of interest rates for the cash as well. So in the UK, like you mentioned, it's like £1 trillion and like 66% effectively sitting like 2% or so. In most of the other European countries, it's even worse. Like in most of the other markets, like they earn nothing. So you don't get anything back. So it's kind of this weird situation where it seems that customers are losing out in every single corner. And the good thing is that it's changing. Like we can see banks are reacting, are forced or not, but like they're reacting and getting into the position where like fixed term is going up and like current account deposit rates are going up. And like we're getting into the better situation where the customer also wins.
So Nadine, just to play devil's advocate, why shouldn't banks make money? I mean, isn't it okay? I mean, if customers put their money into accounts and they accept that rate and they don't move it, what's wrong with banks making a return? I mean, they've got to make money somewhere. What's wrong with banks doing that?
I think it's interesting because I think there's a big argument basically around the moral debate. And ultimately it's kind of, morality versus profitability. Given, like Martin said, the environment that we are in now, the volatility, the uncertainty, the high rates, paying more from a moral perspective, yeah, of course, the banks should be doing more to help out customers. I think especially also given the introduction of consumer duty last year, which obviously states out how banks need to do more to give fair value, fair prices to their customers, suitable products and services. I think that perhaps is going to be slightly changing the course of how we see this moving forward. I know that last year, the FCA, they received fair value assessments from 7 or 9 rather of the largest firms around how they're currently pricing their savings products. And the conclusion from the FCA was basically that there seems to be a bit of a discrepancy with how banks are actually defining what fair value is. And more work needs to be done to make sure that there is a consistent framework that everyone agrees this is how we define fair value.
Fair is a slippery term, isn't it? Because what I think is fair and what you think is fair might not be the same. But yes.
Exactly. So I think, I think there's no one answer to this. I think, like you said, it's both sides of the coin, morality versus profitability. How much do you balance the needs of the customer, helping people in a really tough economic, uncertain environment with still meeting your targets and obligations?
Fliss, I'd love to bring you in on this. What do you think part of the solution might be? I mean, how might either the banks or the market as a whole sort of go about addressing this? Because at some level you could say, well, this is kind of a market failure because customers are failing to respond to the increase in interest rates. It's kind of customers' fault. I don't want to say it's customers' fault. I don't believe that. But Fliss, what do you think part of the answer might be here?
Yeah, so I get what you're getting at, and I think obviously the answer is open banking again. And I think this is where there's the real tale for open banking to expand into an open finance world, and it brings all of these things together. The SEPA incident that we were just talking about, the FCA consumer duty that Nadine was just talking about, and if open banking from the data perspective, where there's dashboards of account information, could be opened up to cover more accounts, investment accounts, all sorts of savings accounts, mortgage accounts, so that consumers had a true dashboard and picture of their financial life and their financial situation, and that be presented, and I'm not a product person, and that be presented in a really friendly, low maintenance manner, then I think that would really open up, and that would be fair, and it perhaps would encourage people to switch around more, because this also does touch on perhaps socioeconomic diversions as well. People are often quite scared of finances. And you can say, well, people ought to search around and switch around more, but the banks have got quite a privileged, trusted position in society, and no one's saying that they shouldn't be able to make any money, but quite the level of profits they make to the detriment of passing on then the upside to consumers, I think is pretty heavily weighted in one direction. So I think the answer's moving open banking to open finance and making this easy and friendly and accessible for consumers to then feel empowered and move their money around and make their money work for them.
And if I may, just building onto that, this article here obviously speaks about the £1 trillion of deposits that are earning below average interest. I also read a stat earlier that said there are 13 million current accounts in the UK that have over £5,000 sitting in them. So, there's the issue of deposits sitting in low interest savings accounts, but there's also the issue of deposits sitting in current accounts earning nothing. And so it's, we have to address that as well. And I think to your point, Fliss, open banking would probably be very, very useful especially for those who haven't even opened the savings product because they don't know where to start. We speak with a lot of customers, and one of the themes that has come out recently, especially given the climate, is around this inertia. I know I need to do something, but every time I open the news, there's just so many negative things that it almost makes me feel paralyzed. And I don't know how to take the first step. I need help with just understanding the best way to do this. So I think that's a real key point here as well.
I actually figured out something what makes people to move. And it's pretty cool. If people would understand what are the fees or missed opportunities, this is the place where people will start really thinking about it. Because if you have just money on the bank account, you don't realize that somebody's getting actually a lot of money out of that. So if there would be a kind of fee schedule around it, you see like, oh, this is actually earning quite a bit of money at the moment. But like I'm coming from the environment, like for example in Wise as well, is that like you go and talk to try to exchange in a bank and they say like, oh, it's free, don't worry about it. And then they give you a wrong exchange rate, which is like bullshit in many ways. Like they actually lie into your face. So it's like, how do we kind of create this kind of transparency where people understand what's actually happening with their money? And like we have so many customers who like finally go through all the data and then see like, oh, I'm paying like arm and a leg for everything what I'm doing. So I'm already doing that. Like if this is the kind of the thing what starts moving people. So if there are more kind of understanding of transparency, then I think everybody wins out of that. And like the fear comes out of that. Then like not fear, but like fair market value, because people move where they actually see the benefit. But like today, many times they don't realize that they're getting screwed over.
That's a really good point, actually, about showing people what are the fees that they're saving, or the costs, what they would have made had they moved elsewhere. And at the other end of the scale, perhaps it's easier to demonstrate that. So, for example, for VRP, variable recurring payments, Ordo has got quite a few credit and lending clients, and the flexible nature of being able to repay extra if you have extra money, you had extra shifts or had extra tips off of a loan, or not have to cancel a mandate if you need to delay by a week or a day. Being able to repay extra, you can effectively see, if I pay an extra £10 this week, I will reduce my loan overall. And that is a demonstration of how open banking and instant transfers can really help people manage their money and get the best out of it. And that's a real eye-opener to people and the charges that they're potentially exposing themselves to.
I really love that. Martin, I'd love to just finish this on you. You mentioned earlier your savings proposition at Lightyear, and if I understood rightly, you said you offer base rate minus 0.75%. Is that a sort of permanent offer? You're sort of saying we will permanently offer the base rate minus a little bit, because we have to cover our costs a little bit. Is that kind of part of your solution to this problem?
So we actually built even a better product. I'm sometimes struggling to explain that product to people. So there's this magical thing called money market funds, what effectively banks use to kind of move their money around. And we brought BlackRock's money market funds to our platform, so everybody can come in and buy and get like even better rates. So effectively the rate is something like base rate minus 30 basis points, 0.435 or 0.09 sometimes if you're putting more money in. So this is like actually a really efficient kind of way. And I think like the times when we have interest rates, we should have a product on the place like what people can use to actually earn money. And like today interest rates are high. Like at one point they will go lower, but like I'm really skeptical that they're gonna go negative. So in that sense, like I think there should be always a way to, if we want to have low risk, like what the cash is, low risk interest rate, you should use this product and that's it. So, and like on top of that, you have like other things. You can buy ETFs or like whatever you want to actually be exposed to the market more into kind of market volatilities. But like today, and I think like foreseeable future, like getting low risk interest is like one of the best solutions out there.
Fantastic. Well, thank you to all three of you for shining some really important light onto that topic. And I'm now thinking about some of my own cash. A couple of my savings accounts. Have I checked those recently? Right, we're just going to take a quick pause here while I go and check my savings accounts, and we will be back very shortly. Welcome back. Before we get into the second half of the news, a quick note to check out our most recent Fintech Insider Insights show. In this episode, my colleague Kate Moody discusses the great wealth transfer with a panel of expert guests, including Antoinette Rodriguez, president at Marfi Advisors, and Dan Hegarty, chief executive and founder of Communion. They discuss the estimated $84 trillion of global wealth being passed on from boomers to millennials and what this means for financial services. How are we adapting to meet the needs of a younger, more value-driven generation of wealth holders? And how will this change the wealth management landscape? So please check that one out in our podcast feed. It should be the one just below this. Now, let's get back into the news. So our next story came from Kenyan Wall Street, and it is that the Pan-African Payment and Settlement System, or PAPS, expands into North Africa. Banque Centrale de Tunisie, BCT, is the latest firm to join PAPS as it expands into North Africa. Founded by Afrexim Bank in 2023, PAPS is a single payment infrastructure that cuts through the existing challenges of local currency exchange and ensures instant payment of funds. For example, a trader in one country can instruct their local bank to pay a supplier in another participating country in their local currency. According to its website, it works in collaboration with Africa's central banks to provide a payment and settlement service to which commercial banks, payment service providers, and fintechs across the continent can connect as participants. Other members include 6 in the West African Monetary Zone, including Nigeria, Ghana, Guinea, Gambia, Liberia, and Sierra Leone, 3 in East Africa, Kenya, Rwanda, and Djibouti, and 3 in Southern Africa, Zimbabwe, Zambia, and Malawi. So, Nadine, as the African, I think, in the call, I'm not sure. I'm going to bring you in on this first. We talked about sort of new payment regulations in the Eurozone, but presumably this is a sort of bigger opportunity, but also a bigger challenge in Africa. What do you think?
Yeah, absolutely. So having grown up in South Africa, I am very passionate about what happens on the continent there. So I do love to keep track and follow these types of innovations. I think, firstly, with regard to what additional challenges are there in Africa, you have to understand, obviously, a little bit around the market, how it differs to Europe, the US, etc. So firstly, it is still a very much cash-reliant society. That's driven by a number of factors, but of course, one of the biggest ones is around how, I think the stat is 85% of employment is within the informal sector, and traditionally within the informal sector, you are paid with cash. So, that's one of the biggest challenges, of course. Secondly, it comes to infrastructure. Of course, this new payments initiative has been launched with the intention to unlock potential for internal trade, enabling more efficient flow of transactions across African borders, which is fantastic. But there are, of course, still the concerns around, well, is there equal infrastructure amongst all these different countries? And then I would say one of the other challenges is, there are 54 countries in Africa, and this 12, thank you. And currently, 12 members have signed up. It's progress, of course, but for this to be truly successful, there needs to be uptake and rapid uptake amongst all the different countries, because otherwise, it's no good only a few of them committing to this, others still relying on the SWIFT system.
Some of the bigger economies, Nigeria, Kenya, missing South Africa conspicuously, in Egypt, but there's some big ones in there.
There are some big ones in there, absolutely. So it's certainly progress. I think one of the drivers of this is the reliance currently on the US dollar in Africa, and obviously wanting to try and move away from that, trying to promote and rely on local currencies more. So I think this is absolutely going to help with that moving forward.
Fliss, as someone with a lot of experience in payment systems and all the legal complexities, how big an achievement is this to create a Pan-African payment and settlement system? I mean, is this quite a big deal? It seems like a huge achievement to me.
Yeah, I think it's huge. I mean, I don't really know much about the African continent, but you only have to look at how long things take to get agreement and legislation through Europe. And I think that's perhaps it's easier to get things through like-minded countries wanting to achieve the same thing. Africa is a broader continent with many more countries. So I think my hat's off to the people behind this and trying to get it through. And 12 countries out of, 52? It's a good start, I would say.
Martin, what did you think of this story?
It's tricky to build so many markets and countries and bring everybody together. Like it's many ways similar to kind of Europe, where you have the cultures and like you have different currencies and so on, and like stitching all the system together, especially when it doesn't move like instantly, it takes time. Like everything what's slow costs money, creates risks and whatnot around it, and the kind of problems come in also like when you have like smaller currencies, like if you have dollar and like euro and pound and all these kind of things, then like they're incredibly liquid, available in various different places. But the moment you're going to go into kind of smaller currencies or like less well used currencies, then all this stuff gets like extra complicated. Like where to get liquidity and like are there risks, and especially when the currencies are volatile. Like there are many nights in my life where you wake up and you see like, I don't know, Turkey has a coup and like the currency moves like 50% somewhere, and you need to figure out like, okay, what do you do? What's your exposure there? And like if all that stuff happens in 52 markets constantly, that like like building it together is quite an achievement. So I'm incredibly happy to see this is happening, because this benefits in the same way as European single market, it benefits Africa as well. But I think it's far away, like to have like really strong, robust system at the moment.
Nadine, you made a really interesting point earlier about sort of potentially moving away from the US dollar, and the US dollar being sort of used as almost like a currency across the continent because it's easy to exchange into and out of. How important is that movement away from the US dollar here versus how important is it sort of encouraging trade between different African countries? Because, to the point Martin was just making, when you have lots of different currencies, intra-African trade can be more difficult than it should be. I mean, obviously there's logistical and other difficulties, but intra-African trade is perhaps not as great as it could be because of the difficulties of exchanging currencies and making payments. So kind of which is the more important, or are they just hand in hand? Is it a shift from the dollar? Is it more intra-African trade?
I think it's hand in hand. I think, with intra-African trade, one of the considerations is as well is how do we do it on our terms with our local currencies? How do we decrease this reliance on the US dollar? And to Martin's point, one of the biggest problems is around the volatility of the African currencies and how that then contributes to higher fees, higher costs for doing business in your own currency. So I think from the consumer perspective and then how this filters back to the countries and how they promote that is, well, actually, if you've created this system that does make it much easier for me to send money from my business in Kenya to yours in Nigeria, then actually if we can hopefully make those currencies slightly more stable, then within the continent, can we start relying on our own currencies more than on the US dollar? So I really do think they go hand in hand from that perspective.
Fliss, you were talking earlier very eloquently about the sort of how important instant payments and instant transfers are in Europe, in the developed economies of Europe. And I'm thinking, well, surely in Africa, that's actually going to make an even bigger difference, because you've got more opportunities for faster movement of money to actually make a bigger difference to people's lives. I mean, this, because this is an instant payment of funds. That's huge, isn't it?
Yeah, I agree. And I think it's almost the same benefits as in the UK and the EU of greater liquidity, being able to make decisions instantly. You've got funds instantly. You can send money elsewhere. You can send money to family. You can go and buy replenishing supplies. All of that it's all the same benefits, just times more. It's magnified, I think.
So I suppose the question really is what's holding back other African countries and other African banks from joining this system? Feels like we need to have a Fintech Insider Insight show on African payments. I mean, okay, I'm a bit of a payments geek. I'd like to listen to that. I'm looking at our producer and seeing if he's nodding, but watch this space. I'll see if we can persuade them later. Okie dokie. let's move on then to our next story, which is that Revolut is combating roaming charges with eSIMs. So this was reported in Finextra. Revolut's new eSIM service will help its customers tackle expensive data roaming charges when abroad. These charges have escalated for Britons after many mobile networks cancelled their free EU roaming as one of the benefits of Brexit. However, as of now, British customers can install an eSIM which they can manage and top up using the Revolut app. This enables customers to continue using their app and all services within it without draining their mobile data allowance. Ultra plan subscribers will gain access to 3 gigabytes of data which they can use globally each month, and all customers in the UK will benefit from an introductory offer of 100 megabytes of mobile data at no cost. So we asked our own Joe Colchester, head of product at 11FS Pulse, for his thoughts quickly, and this is what he said.
Revolut baking eSIMs into their offering is a dream for regular travellers, and it's actually a really big deal. Standard users are entitled to a complimentary 100 megabytes, while Ultra users, and these are the premium ones, get 3 gigabytes monthly. This is a genius way to double down as probably one of the best go-to travel cards out there. Perhaps most impressively, though, is how Revolut has made the process of getting started with these eSIMs so incredibly straightforward. You can select and activate an eSIM directly within the app. It's effortless, it's really, really quick, and all the necessary information is right there at your fingertips. Actually, you're probably unlikely to find a quicker eSIM activation process out there on the market. It's remarkable UX.
Thanks, Joe. So for those of you who don't know, 11FS Pulse is our product research tool with a digital library that now has more than 6,000 best-in-class customer journeys from across financial services. So if you work in product, design, or user experience, the team would love to walk you through a quick demo of the platform. Just head to 11fs.com/demo and book your demo today. Martin, how big a problem do you think Revolut is solving here? Is this a big issue?
Depends for who. I think it's the way the product is designed gives quite many clues. So, for example, I struggle with this quite a bit. I travel a lot, and every market you buy a new SIM or you need to kind of somehow hack it together, and it's super inconvenient. So, in that sense, is it a good product for me? Yes. Is it? Does it kind of solve the situation where everybody in the world will start using that kind of product? I'm a little bit doubtful, and the reason why I'm doubtful is that it seems that they don't try to build the best mobile service. They try to build the best way to get more people to their subscription model. So you look the product is significantly better when you're paying more money to the kind of the ultra premium package. So effectively, it's really good funnel for getting people to pay a monthly fee, which is rather significant. But I have to say, it's for various different elements, it's actually pretty cool. So I have been using Revolut, for example, insurance, and you have travel insurance, super easy way, comes with your card, makes a lot of sense. I think last year they changed the terms, so it's not that good anymore. But again, this was my keys to using this product. So I think yes, there is a market, and it's pretty huge market, but it's mostly amazing perk to accompany it with the general app in that sense. So the real money is still in the app, I think.
What do you think, Nadine? Is Martin being fair there in saying that Revolut's kind of identified a good problem, but is really trying to push people into its premium products?
I think it's fair, and I think the first point that Martin raised around to who is for me the most important. If you're someone who travels frequently, perhaps travels for work, then I can absolutely see the benefit to this. I have a slightly different point of view. This is just based on my own personal experience. I also love traveling, but one of the things that I quite love about traveling is going to a new place and knowing that I can only be on my phone when I have Wi-Fi. I find that that's such an integral part to me embedding in the culture, not being distracted by my phone, which I'm distracted by every day otherwise, and just really enjoying actually that kind of hands-off digital detox type of situation. And my husband and I were talking about this the other day, unrelatedly to this story, but when we started dating many, many years ago, I guess 16 years ago.
I don't believe that.
Yeah, I promise you, you can confirm with him. This was before WhatsApp, and I went on a trip to South America actually. And the only way that I could communicate with him to update him on what I was doing was via Facebook Messenger. And that would be very sporadically, every 3 days or so when I had access to the internet. And then I would send a long, long message giving him my update. And he said how much he actually misses that in a way, because now with Wi-Fi data, eSIMs, you can just be constantly messaging, constantly updating. So from my own personal experiences and what I enjoy doing when I travel, I probably wouldn't use it. I haven't used it yet, but I can see why someone would.
I like the digital detox. Fliss, what do you think? Is this a genius move by Revolut?
I sort of think it's a genius move, or maybe not quite genius. I think good on Revolut. Why not? They're obviously trying to build a bit of a theme in their bolted on services. They've got, they're going for travel and luxury. You can get airport lounge passes, travel insurance, like Martin said, cash back on certain hotels, and now they've got their eSIM. But I do tend to agree with Martin. I think they're trying to get people onto their subscription account service. And why not? They're a financial institution. They're there for profit. They're trying to earn revenue. Good on them. Will it be the take home, the go-to app or the super app or the app for travel? I'm not sure. But I think it's interesting. It's almost turning embedded finance on its head, rather than thinking, where can we embed finance into other journeys to make it seamless? This is taking travel and wanting to embed it into their app and making it the app that people organise their lives from. And do people want to organise their lives from their banking app? I'm not sure, but good on them for trying.
Revolut did, of course, start as a cross-border payments app. I mean, the way that many of the earliest Revolut customers, indeed many current Revolut customers, first heard about it was a friend saying, "Hey, here's a good way of paying overseas at low cost." Before some people had heard of TransferWise, right? It is kind of how Revolut started, right? Martin, I mean, I'm always a bit skeptical of super app as a strategy, because I think anybody who sets out to try and build a super app is kidding themselves. But actually, Revolut are kind of edging bit by bit to, as Fliss is saying, delivering more and more of the things that some customers are looking for.
Don't get me wrong, I'm also using Revolut for some things, and I think ability to get everything in one app, it's actually pretty cool. So the main place where I often struggle is that it's the super apps are effectively similar kind of mentality like a bank, means that you have a lot of things, and most of these things are superficial. So most of these things are not the best in the world. So when I'm thinking about the brokerage world, then Revolut, yes, has also some brokerage angle there, but is that the best way to invest in all the markets around there? Answer is no. So it's not. So I think in some things which are easy and maybe light services, I think it makes absolutely sense. Again, getting travel insurance makes so much more sense than going and haggling with somebody every single time I travel somewhere. Just having it somewhere in the back makes a lot of sense. And I'm pretty likely use the eSIM at one point just to make sure that I'm in some random part in the world and I'll make my calls there. But I don't think they're gonna go deep enough to actually solve the bigger problems there. So I think there's place for Revolut, and they're incredibly successful. They're one of the most successful companies who are able to build something in various different markets. And this is no means easy thing. Most companies, banks can't operate in multiple markets. Even the biggest ones have couple of markets only. So I think this is amazing what they're doing. But there's different things what people want from the different products. And I think depth is not the thing what they do.
But you're right. I mean, we sort of take it for granted that Revolut operates across Europe, but which other bank operates all the way across Europe? I mean, you've got some huge banks like BNP Paribas or Raiffeisen or whatever, but I think Revolut's in more markets than pretty much anyone.
like even if you take like HSBCs and biggest banks in the world, they're like, even if they are in different markets, they have totally different systems what don't really work with each other. And like sometimes you have like two portals because you have one market in Singapore and one in London or something like that. So it's actually like rather dumb how the finances are fragmented. So I do think like Revolut has done it, Wise has done it, and then you have like, I don't know, who else? PayPal maybe. So like there's not much out there.
I think going back to the point around super app, I did some quickfire user research up in the lunchroom earlier to try and get an understanding of customer perceptions towards super apps. And my conclusion based on the 20 minutes of research is that there are definitely two camps of thought when it comes to this. Those who say, yep, fantastic, yes, I've got my smartphone, but actually I would really love the ability to free up space on it, unify different things into one app, just have that kind of convenience of everything in one place. Whereas on the flip side, and we speak around, kind of mental models of money and flow of money, there was quite a number of people who said, well, actually, I like the separation through different apps. I like that I use Revolut just for my international payments. I like that I go to Barclays for the trust and stability of having my salary paid into it. And, those are obviously two finance examples, but very much saying, no, thank you. I don't want to have one app to do everything because that's not how I think about my life and how I want to organize my life. So I think it's very interesting from that perspective. And I think often when we speak about it here in Europe, perhaps we're relying too much on the success that super apps have seen in Asia and just assuming that we might get that same success here in Europe. That's obviously TBC based on what players like Revolut end up doing to continuously add to their product offering.
I do like your conclusion that different customers are different, want different things, and there isn't a one-size-fits-all answer. Fliss, final thought to you. Revolut does just keep innovating. I mean, you don't see Starling or Monzo or N26 or many of the other Chime, many of the other digital banks around the world, even, Nubank in Brazil. You don't see them innovating at quite the pace that Revolut manages, right? I mean, credit to Revolut, do we think?
Yeah, and I think they might land somewhere in the middle, perhaps not make it as a super app to brandish out all these other apps, but their following does attract customers that are more loyal and also more enthusiastic about their finance provider than people generally are about their more traditional bank. Like Nadine was saying, people might have their salary paid into a traditional bank, but they don't like their traditional bank. They're not going to enthuse about it to their friends. But people do talk about Revolut Bank, and so maybe it will become that fun, loyal travel and finance companion, which is more than just a finance institution, but not quite the super app to banish all of the need for all other apps.
Well said. Well done to the team at Revolut for cracking another problem. Keep at it. Okay. Now for Big Click Energy, which is a quick look at one short story that we didn't have time to cover in more depth, which is that Australia's Craggle has released an AI tool for refinancing home loans. So this was reported in Finextra. Craggle is a fintech created to help Australian homeowners find better deals on their mortgages. The new AI tool is meant to reduce the friction in the refinancing process by essentially eliminating the need for mortgage brokers. Through its partnership with many of Australia's major banks, the new tool uses crowd haggling to negotiate the best rates for borrowers automatically. It also uses open banking data to autocomplete forms on behalf of the applicant. In just 6 months since launch, Craggle claims to have facilitated over 354 million Australian dollars worth in loans and has saved Australians an estimated $1.8 million in interest. So this is fantastic to see. Obviously we're seeing more and more applications of artificial intelligence, but there is always a part of me that does sort of wonder to what extent do some financial intermediaries really add value when they're only gathering information, which is not, of course, what all financial intermediaries do. But any tool that helps people find better rates, find better deals, is only really good news for customers. And a little bit like what you were saying earlier, Martin, with Lightyear and highlighting how many customers are sitting on accounts earning very little savings interest. There are, of course, lots of customers in Australia and all around the world who are sitting on mortgages with increasingly expensive deals, needing to refinance to find better rates that get them out of what can actually become quite a deep hole if you've borrowed an awful lot of money and interest rates move against you. So great news from Craggle, and let's wish them every success. Okay, now it's time for the and finally section of the show, something a little bit more offbeat from the news this week. So this week has been Valentine's Day. Obviously, by the time you hear this story, Valentine's Day will have passed. But we couldn't resist this story, which was reported in TechCrunch, which is Meet Score, a new dating app for people with good credit. Launched by Neon Money Club, Score is a new dating app exclusive to those with a minimum credit score of 675. But if you're looking for love, you need to sign up quick, as it's only going to be available for a limited time. Prospective users face a soft credit check by Neon Money Club, which does not affect the individual's credit score. On approval, users can swipe left or right to find their potential soulmate, just like other potential dating apps. It's also designed to raise awareness about the importance of finances in relationships. I'm not quite sure where to start here, but Nadine, do you think a credit score is important to people in a potential partner?
Look, I can't say that I ever asked my husband to share his credit score with me before accepting his marriage proposal. However, I think the key point here is more that last point you raised around how do we actually encourage those kind of difficult conversations, but ones that are super important. You know, we know how important it is to make sure that you're on the same page financially with your partner, but it's an awkward thing to do. You know, where do you start? So I think something like this, which is almost taking away that upfront, like, hey, are you good with your money? You know, how do you like to save? How do you go about thinking about these things? That is quite attractive, I think. Yeah, if I was on the dating scene and was looking for a dating app, I would probably download this and give it a go just to see whether it shoots out people who are different from the other dating apps.
Fliss, what do you think here? Do you think there are lots of people out there who think a good credit score is going to be an attractive quality in someone?
I'm not sure, but I think this is a great and funny story to have. It sort of implies someone might not be a good or nice person if they're not that good with money. I don't agree with that conclusion, but I read in a magazine years ago, it was a bit like a pop quiz, a question, and it actually knocked me for six. And the question was, if money knocked on your door, what would money look like? And it really brought home to me the feelings and in the back of my mind, the things, for example, that I have about money, which was it's unreliable, you absolutely need it, but it might be gone here today, gone tomorrow, but you can't live without it. And I thought, it was the first time I realised, wow, I've got these thoughts in the back of my mind of what money is. No wonder I don't like looking at savings accounts and moving my money around to get a better rate at times. And I'm one of the fortunate people that's financially comfortable in life. So I think working out what you feel about money and how money makes you feel, does it make you anxious? Does it fill you with optimism? How you manage money and being able to live within your means and then put money aside if you're able. All of those are important, and they are hard things to talk about with other people. We're quite uptight Brits when it comes to talking about our salaries and finances, and we should break down that barrier. So maybe this is a good thing to try and make a joke of it and break that down to get people talking.
Fliss has just outed the Brits for being uptight in general and about finances in particular. Martin, as someone who's not an uptight Brit, do you agree with this sort of the intention here to try and get people talking about money and get, you know, particularly money in relationships, because that, you know, that can ruin a marriage, right? I mean, do you think this is what do you think?
So it's interesting. I can give you a polar opposite answer. So I actually made an Excel to try to figure out who's going to be my partner. And then I had this criteria, and I selected a girl who's my wife now, and we just got a new first baby.
Congratulations.
Which was an amazing journey, because like I kind of figured out like who is the partner I want to be with and spend the rest of my life together. And like money wasn't the criteria there. Like there wasn't a line. It's like she has to have like so much money or like good credit score or whatever. So like I didn't consider this. Maybe you should consider it. But on the other
So
hand,
you were very structured. You were very structured in your assessment, but money or credit score wasn't a criteria.
yeah, I figured like there's like a lot of things about like what we want to do together and like what are their values and everything around that. And maybe that kind of corresponds or like correlates to the money at one point. So I don't know, maybe. But on the other hand, like if you're thinking about like talking about like financial understanding and health and whatnot, like this is almost non-existent. Like nobody is really getting the financial education. So like the statistics are pretty bleak at the moment, where you can see that most people expect their governments to kind of take care of them when they are getting retired, and like governments don't have money. And then there's like, I think the second most kind of followed criteria was that like we're gonna live from our savings. And like when you look in savings data, then like 60% of the people have like 1 month savings. So like how long is your kind of your retirement? So it's kind of rather bleak situation. So I think like when people start realizing that like to actually gain wealth, like you need to not just like think about it, but you need to act. And like the sooner you act, the faster you're getting into this position. And maybe now coming back to this app, like if you have people around you who are willing to support you and think along with you and like sometimes kind of motivate you to continue like saving and investing and growing your wealth, then like I can absolutely see this kind of benefiting you a lot. Because again, like most people don't really have money to kind of save or even kind of really kind of organize well, because they just don't know how to do it. So I can see like a lot of cool things happening. Like I'm not sure I would want to match with somebody with like extremely low credit score, but like maybe sometimes you want to help people out.
So we're not quite kind of coming to a conclusion, are we, as a team, on whether a high credit score is an attractive quality in someone. It might be in certain circumstances, depending on who we are and what the situation in life is. But I think I'd probably be with Martin that if I ever had a spreadsheet for identifying a partner, I don't think the credit score would have been on there. From look on Nadine's face, I don't think it would have been either.
No. And I suppose just going back to Martin's point around education, I mean, I don't know what this app currently does if someone applies and they don't meet the credit score rating. I think what I would hope happens is that they are provided with some kind of educational content to say, hey, you know, you can't be part of this app right now, but here are some ways in which you might be able to improve your credit score. Because I think that's a really important aspect here. No one should be made to feel any worse about, you know, the financial situation that they might be in. And I think any app, any tech company these days should maintain that responsibility and try to help people get out of a situation that might not be the situation they want to be in. So that's...
Yeah, absolutely. It should be all about helping people improve their situations, not sort of almost not laughing at them, but, you know, sort of
putting them down.
Because
yes,
yeah, indeed. Okay, well, that's a fantastic story to end on, and I do think that's a brilliant way of getting people to think about it, even if the idea of actually selecting a partner on the basis of their credit score is, to me, pretty horrendous. I agree with Fliss. Some of the most wonderful people I've met in life have been utterly hopeless with money, and you love them for it. But yeah, I suppose you think carefully about, if I married them, would I be in charge of the finances?
Yeah.
All right. Well, that wraps up this week's Fintech Insider News. Thank you so much to my three guests today. Where can people find out a little bit more about you? Fliss, where can people find out a little bit more about you and their work?
Well, that would be great. I'm on LinkedIn, Fliss Berridge, pretty simple. And if you want to know more about Ordo, it's ordopay.com.
And Martin, how about you?
I just realized that I have the same. You can find me on LinkedIn, Martin Sokk, and Lightyear.com. Like LinkedIn is such an old people's social network. Like how we ended up there.
And Nadine.
Another one for LinkedIn. Feel free to look me up and connect. Nadine Timmer-Bodenstein.
And as for me, Benjamin, well, obviously you can find me on Instagram and Snapchat. And on LinkedIn. Thank you all very much for listening. We hope you've really enjoyed today's podcast. Please do join the conversation on social media and get in touch with us. Thank you all so much for joining and for listening. Thank you so much and goodbye.